Chapter 3, Profitability, Part 1. In the Chapter 2, you learn decimal, unit measure, percent calculation, and how to use these percentages. And from this chapter, and for other chapter, you will learn more of the application of this basic math. And especially for Chapter 3, you will learn about the profitability. And there are 5 objectives for this chapter. First, you'll be able to define the elements of a skeletal profit and loss statement at the end of this chapter. And you can complete a skeletal profit and loss statement. And third, to understand the importance of controlling expenses in order to maximize profit. Especially for the businesses, you have to know this concept. The businesses is to make profit. So to make profit and to maximize these profits, you have to know how to control the expenses related to your sales and operations. And to express gross margin, expenses, and profit as a percent of net sales. And the last one, to recognize and calculate productivity or efficiency measures, including human resource, space, and inventory productivity. So if you don't really know about these terms yet, don't worry about it. That's what you're gonna learn in this chapter and throughout the semester. So don't worry too much, and you're gonna go step by step, so don't worry. And let's go and look at the overview for Chapter 3. We're going to start from the relationship of basic factor, and you will learn the basic profit factors. And also, we will talk about performance measures, also human resource productivity, space productivity, and inventory productivity. So the productivity, depending on the human resource or space or the inventory, you will learn how to calculate all these. And for this Chapter 3, Part 1, for this video, for this lecture, today's lecture, you will learn the relationship of the basic factors in the profit and loss statement. So let's go ahead and start from the relationship of basic factors. Operating profit is the result of the relationships among sales volume, cost of merchandise sold, expenses. So think about that you're doing the business. And when you want to calculate the profit based on what you sell, you have to know about these all different components of it. The first, you have to know how much sales you made, of course. And you also have to know how much you spent to buy this product, because you have to deduct this amount from the sales. And expenses, that means that expenses other than cost of merchandise sold, such as when you employ someone, then you have to pay these employees. So you have to think about this expensive, and if you rent the place, then you have to pay the rental fees and so on. So you have to think about these operating expenses, because that's gonna be also not the actual profit. So you have to deduct this amount to calculate your net profit. So the relationship of these 3 factors can be shown in a skeletal profit and loss statement. And the reason we call that as a skeleton statement is because it contains only the major component of the profit and loss related component without showing in detail how the 3 factors are computed. Also, if you look at this statement, you can see they look like a skeletal, structure. So that's also called as a skeletal profit and loss statement or income statement, and so on. So you have to know more details about that. And let's talk about the 5 important factors to make this skeletal profit and loss statement. First, it includes the 3 basic merchandise factors we discussed already. So that includes net sales, cost of merchandise sold, and expenses. And you will add two additional factors, including gross margins and profit. And if you look at the example, that's gonna be much easy to understand. So go ahead and look at this example. Example number 3.1. Here is the profit and loss statement, also called as a skeletal statement. And as you can see from this example, you see all these 5 important components of skeleton statement on the left hand side. And it can be described in dollar or percentage. And start from the net sales. There's a really important hint. So it shows you that you have a net sales of $100,000. And your net sales will be always 100%. So if you know this, that's gonna be easy to calculate other percentage here. And second, you have a component of cost of merchandise sold. So that means how much you spend to buy the merchandise, because that's not gonna be the profit. You have to deduct this amount out of your net sales. And if you know this number, then you can calculate the percentage. Cost of merchandise sold, the percentage can be calculated as dollar amount of the cost of merchandise sold and divided by net sales. So that is 60,000 divided by 100,000, then you will get 60%. So that means that 60% of your net sales were spent for cost of merchandise sold. And if you know this number, you can calculate this gross margin. So let's look at the gross margin. Gross margin is the difference between the net sales and cost of merchandise sold. So that is 100,000 minus 60,000. So that is, you can use a calculator, or this is easy math, so you can just go ahead and minus these two. And what number you got? That is 40,000. So your gross margin is 40,000, and if you know this number, you can calculate your gross margin percentage. And actually, there are two ways to calculate this gross margin percentage. First one is gonna be, the formula of this gross margin is gonna be net sales minus cost of merchandise sold. So you can do 100% minus 60%, which is 40%, or gross margin dollar amount divided by the hint. Dollar net sales. So you can get 40,000 divided by 100,000. So you will get same as the 40%. And this statement gave you the operating expenses. So it shows you that your operating expenses are 36,500. If you know this number, you can calculate the percentage. So once again, your numerator is gonna be the percentage that you wanna get. So that's the dollar amount of that. So dollar amount of the operating expenses, which is 36,500, and divided by the hint. Think about the hint, net sales, right? 36,500 divided by 100,000, then you will get 36.5%. Okay, so you got lots of numbers. Now you know how to calculate these numbers, which is really good. And now you're gonna look at this profit. So you don't know about the profit yet, but the reason that you do this is to know about this profit. One of the reasons. Because not just to get the profit, this skeleton statement is really important, because you can kind of make a plan for the next year based on this information. Sales or gross margin, expenses, cost of merchandise sold, you can kind of make a different plan to make a more profit the next year. But another important part, you also have to be able to calculate the profit. So your profit can be calculated based on the gross margin and operating expenses. So your profit is the difference between these two. So gross margin, which came from this, right? Net sales minus cost of merchandise sold. So you got the gross margin and gross margin minus operating expenses will be profit. So here is that number. So $40,000 of the gross margin, so you have that, and operating expenses were 36,500. So the difference between these two, can you tell me what number you got? 40,000 minus 36,500, so you got 33,500. So that's gonna be your profit. And if you know this profit, you can calculate the percentage of this profit. Profit percentage, two ways, because you know the formula to calculate the profit, which is gross margin minus operating expenses. So there will be 40% minus 36.5%, or you can do 3,500 divided by, think about the hint, which one is gonna be the denominator, go to the bottom. Yes, that's gonna be the net sale. So 3,500 divided by 100,000. So you will get 3.5% as your profit. And from this statement, you have a plus number at the end. But not always that will happen. It's always good to have a positive number. But imagine that if your expenses are more than your margin, gross margin, then you will get minus number for the profits. So that means that you got the loss. You had a loss, right? So if you see the plus number here, that's gonna be your profit. But if you see the minus here, that means that's the loss. So remember this part. And once again, not just this bottom part, but all these statements is really important to make a good plan for the next year or to compare things, So just think about the importance of this and remember how to calculate component of this skeletal statement. So let's go to the next one. So go more details about this gross margin. You already look at this, so you know. So let's kind of recap. So gross margin equal to net sales minus cost of merchandise sold, or it can be profit plus expenses. I'll go back to the previous example, but look at the gross margin. So gross margin here. So 40,000 is gonna be net sales minus cost of merchandise sold, or combination of these two, operating expenses plus profit will be gross margin. So now you know how to calculate this gross margin. So that's the difference between net sales and cost of merchandise sold, but that's before deducting the expenses. So sometimes that's called as a gross profit. That's because it's before deduct the expenses, but the difference between the net sales and cost of merchandise sold is called as gross profit or gross margin. So now you know how to calculate this gross margin. And let's look at another example. So here is the example with the information of expenses, profit, and gross margin. So it shows you the operating expenses of $36,500, and operating profit is $3,500. Actually, this is the part of this previous example, but we are zooming in: operating expenses, operating profit, and gross margin. And we start from the expenses and profit, and the combination between these expenses and profits is gonna be gross margin. So your 36,500 the operating expenses plus 3,500 is gonna be your gross margin. And also the percentage too. Your operating expenses is 36.5% and your operating profit is 3.5%, and you're gonna combine these two to calculate the gross margin percentage. So you got 40%. So also this like a percentage, refer it back to what you learned in the previous slide. This is calculated based on net sales. So think about that part too. So remember that hint always. That's gonna help you when you calculate the percentage in the profit and loss statement. But now you learn how to calculate this gross margin dollar and percent based on the expenses and profit, also based on the net sales and cost of goods sold. And let's go to the operating profit. It can be either profit and loss depending on whether you get the plus or minus. So profit is gonna be gross margin minus expenses. And see the big picture. Your operating profit is gonna be net sales minus cost of merchandise sold, because this is the gross margin, right? Minus expenses. So you have to know this. Gross margin, how you calculate it, then you can see the big picture of this like a profit and loss statement, and you can calculate this operating profit. And think about it, when the profit will occur, think about the gross margin and expenses. If your gross margin is bigger than your expenses, yes, you will have plus of the profit, right? So you will get the profit. But imagine that you spend more, you have more expenses than your gross margin. So when your gross margin is less than expenses, if you have more expenses, then you will get minus of this profit and loss, right? So that means that if you get this minus, that will be loss. So profit occurs when gross margin exceeds expenses, and the loss will occur when gross margin is less than expenses. And let's look at another example here, example 3.3. So this chart shows you the big picture of this operating profit or loss. And what you can tell, you can start from the bottom now, because to see whether there's a profit or loss, and you see plus here is not minus. So that's gonna be your profit. You have profit after you sell and after you spend all these expenses. And this one even have more information. So it gives you that other income. Possibly you have some check received or tax part, you got some like returns and so on. Then you have additional income. Then you also have to add that for your profit. But let's start to talk about this operating profit before you consider this other income. So here, 5 important concepts. So from the profit and loss statement, okay, net sales, cost of goods sold, gross margin, operating expenses, and operating profit. So these are like a 5 important concepts from the profit and loss statement. And you can calculate the other number if you know some of these components. So net sales minus cost of goods sold was gross margin. Okay. This minus this one is gonna be gross margin, and gross margin minus expenses is gonna be your profit. And in this example, you have other additional income. At this point, you're gonna add this. So 14,000 and plus 2,000, that's gonna be your net profit. So you see that. So the difference between these two, you got the gross margin, and the difference between these two, and you got the operating profit. And if you have additional income, you will get the net profit by combining this operating profit plus other income. And now you see this percentage here. So always net sales is gonna be 100%, and you can calculate cost of merchandise sold percentage based on your net sales. So that will be cost of merchandise sold dollar amount divided by net sales. How about the gross margin? This will be your dollar gross margin divided by net sales. And same here. So operating expenses dollar amount divided by net sales. And how about this one? Your operating profit also, that will be your dollar amount of operating profit divided by net sales. So what you see from here, you always have to divide the number by net sales. And other income too. That will be, this 1% came from where? 2,000 divided by 200,000. But if you want to calculate the net profit, so now you know 16,000 was your net profit, then what you can do, 16,000 divided by, once again, net sales. Then you got this 8% of the net profit. So you can say that 8% of your net sales were ended up to be net profit. So kind of like a 92% spent for something else, right? So you kind of get the idea about how much percentage of the profit you got from this statement. And once again, this is really important when you compare the number and when you make a plan, not just the profit part, but you have to know each component of this profit and loss statement. Okay, now let's talk about this percent of the factor. You already learned this. I kind of keep emphasizing which one need to go as a denominator, right? So we said that, I told you that dollar net sales always will go to the bottom as a denominator. So if you calculate expense percent, that will be dollar expenses divided by dollar net sales. How about the gross margin percent? That will be dollar gross margin divided by, always that hint, dollar net sale. How about the profit percent? That will be dollar profit divided by dollar net sale. So you can remember this part, like always the bottom part will not be changed. You just change that numerator depending on which number you want to get. So to find the percent of any one factor, divide the dollar amount of that factor by net sales, right? So remember that, divided by net sales. Here is the example. So now you want to calculate the percent of the expenses. So if net sales are $100,000 and expenses total 40,000, find the expense percent. I think you already remember the formula. It's not really hard. So what's gonna happen? Expense percent is gonna be dollar expenses divided by dollar net sales. So where is the dollar expenses? Yeah, 40,000. How about the dollar net sale? Yeah, here, 100,000. So what you can do, 40,000 divided by 100,000, then you will get 0.4, and I ask you to calculate the percentage, right? Then what you have to do, you have to multiply the number by 100. So you get 40%. So expenses toward the 40% of the net sale. So you can say that, or you can say 40% of your net sales spent for the expenses. There you go. So isn't it fun and exciting to learn about how to calculate all these, right? Okay, and let's look at the next part. So you learn about this profit and loss statement, and you learn how important that is. And I want to talk more about these profit and loss statements in this slide. So profit and loss statement, it can be called in the different name. It can be called as operating statement or income statement or skeleton statement, as I mentioned earlier in this chapter and part 1. And this is really important to summarize that your income, cost of merchandise sold, expenses for a specific period of time, and income means sales and other possible incomes, and maybe prepare for specific departments, an entire store, and several stores that make up a division within a corporation. So if you have the big department store, like you have a women's wear, men's wear, you can prepare this profit and loss statement depending on the department, or you can do it for the entire store. And because you wanna compare this number and you wanna make a good plan for each department and so on, this statement is really important to know and understand. And not just having this statement, but you have to kind of interpret understand each component to make a better plan. And you must show the percent corresponding to the dollar figure to allow for easy comparison. That means that not just dollar amount. So if you have this profit, dollar profit, but when you convert that to the profit, the percent, you may get the different percentage. Even though it seems like you have more dollar sales, but because you spend too much for the expenses or merchandise purchase, maybe your actual profit percentage will be lower than when you make less sales. You got what I'm saying? So you have to you have to show this percent corresponding to the dollar figure. And next example will show you what I'm talking about. So here is the example of the profit and loss statement. And what's the difference of this statement compared to the previous one? Have more column, right? So you see this like a last year figure, and you have this planned figure here. So don't you think you can compare these two easily, right? So it's much better to compare. And not just the dollar part, but it has a percentage. And kind of just think about what you learned from the previous slide. So here, 100% net sales, always 100%. But you can kind of see that it has a different sale, and it has a different cost of merchandise sold, and gross margin different, operating expenses different, and also the profit different. But this is gonna be the plan based on what you had before. So let's kind of like interpret this. So how about sales? Do you want to have more sales the following year, this year, or no? You want to reduce the sales, right? But you can get more profit, right? So let's see why that happened. So how about the cost of merchandise sold? So here, last year, 16,920. This year, you want to spend less for those, so 14,000. There you go. So you kind of reduce these, expenses of the merchandise. And gross margin, it has more for the last year, right? Because you sold more. But let's look at this. Operating expenses. Last year you spent 18,360, and this year you want to spend like 15,250. So that means that maybe you want to have like less people work in the store, or you want to reduce any operating expenses. So there you go. Because of this cost of merchandise sold reduced and operating expenses reduced, you can have more profit. There you go. So you have like a $30 more sales you want to have this year, and you see the percentage also different here, so you can compare it based on the percentage, right? So cost of merchandise percentage also reduce, your operating expenses reduce, also gross margin reduce, but because of this cost of merchandise sold reduce and expenses reduce, you can have just a little bit more profit. So that's what I just talked about. The importance of this like profit and loss statement, not just knowing about this profit part. You have to know all this each component, and you have to know how to interpret this and how you can make the plan for the next year. Because if you want to increase your sale, you have to think about these net sales and how much merchandise you can buy, or how about the expenses. So you have to think about all these related components related to the profit to make a better plan for the next year. So that's that. And the last but not least, let's talk more about the net sales. So of course you have to make sales, then you can think about the profit and so on. And another formula that I'm gonna show you today is gonna be net sales dollar. So dollar net sale is gonna be dollar profit divided by profit percent. Because cost of merchandise sold, gross margin, expenses, and profit are each expressed as a percent of the net sale, it is possible to calculate net sales when the dollar and percent figure are given for any one factor. So that means that this is one of the examples. I said dollar profit and dollar percent, but if you know dollar cost of merchandise sold, percent of cost of merchandise sold, you can get this dollar net sale because you know the net sale percentage. Because what is the net sales percentage? You remember that? Always 100%. So if you know any of these figure for one component, so if you know like expenses, dollar expenses and percentage of the expenses, you can calculate these net sales. And if you know this gross margin dollar and percentage of this gross margin, then you can calculate the net sales too, right? So it is really possible to calculate net sales when the dollar and percent figures are given for any of one vector. So that's gonna be another important concept that you can learn, no? And you can apply that. If you know just like one figure with the dollar, one concept with the dollar and percent figure, then you can calculate the net sales. Isn't it exciting, right? So if you know any of these two, percent and dollar figure for any one vector, you can calculate net sales. That is good, right? Okay, so let's look at this example. So last season, operating profit was $5,000, which represented 2% of net sales. Find net sales. So now you know operating profit in dollar and in percentage. So now you know these one factors in two different figures, dollar and percent. So what's gonna be the net sale? From the previous formula, you see these, there will be dollar profit divided by 2%. Then what you get, that will be $250,000. So you got the figure of this like a net sales out of this information. So if you know the one factor and the dollar and percentage figure for this one factor, you can always calculate it. Put the dollar at the top and percent at the bottom, and you can calculate this net sales. And what you can do to double check, now you know this net sale, and multiply that with the 2%, then you can get the 5,000 as a dollar profit, right? So you can kind of like recheck it after you calculate your net sales. Once again, $250,000 is gonna be 100%. So 2% of that is gonna be your profit, and which is 5,000. So you can kind of like recheck it after you calculate this number. Okay, so that's